What's your business? Feels so fresh. Currently all time lows. Okay. Okay. Nobody else has joined. Let's just get started. This is 3 minutes I've given already. There's something I was telling you guys. I think I've started recording maybe. Yes. So there's something I was telling you guys last week? Okay, so it was this week, earlier this week about imbalances and mm, okay. Yes. So basically, when GBP USD was hanging somewhere around there, let me delete everything. Okay, so now before this move downward, I think did I sell this thing? I can't remember. I don't think I did. Chill. Okay, I did, but it hit my SL before selling. All right. But anyhow, this move right here. Okay, delete this alert. Okay, so now some of you was like expecting GBP USD to, when it was creating some signs of movement, you're expecting GBP USD to like fill in this imbalance. Okay, so as you see this trend that is very very strong, imbalances might not be very very salient, so they might not be very very important, you understand? So um uh how do I even explain this better that you guys understand? Okay, what I said was that the imbalance will not be important until you get into the imbalance area. All right, until you get into the area of the imbalance. All right, so until you get into the area of the imbalance. So now look at this imbalance right here, this quick downward move here, this quick downward move. Okay, you can see this place that there are 2 weeks. Look at this week here. If you mark it, okay, if you mark it, that is another block. You can see this week down and week up. That area is another block. So I will not expect price to fill in this imbalance until this week, until this other block is violated. So until price should um go above this other block into this general imbalance area. So as long as we are forming a new range here, this area right down here is a new range. So I would sell to a pullback of this new range, not the whole imbalance. So except if price should go into the area of the imbalance. This is the area of the imbalance right here. So the area of the imbalance is from up here to this area. Can change the color of that. Alright, so this is the area of the imbalance. So as long as price has not gone into that area, I will not expect to fill in that imbalance. So that's the point I'm trying to make. If the trend is strong like this, okay, you can see series of downward moves, aggressive downward moves. Do not expect to fill in the imbalance. You can just join the trend and keep going down if you have not reached your target. For example, now in this one now you can see that there was a sharp move, this imbalance, a sharp move, all right? And now our target obviously is this external liquidity here. Obviously, this is our target, all right? So as long as that target has not been met, I'm not expecting any pullbacks, any major pullbacks, because we are looking for some delicious liquidity. Okay, so if If you are on your way home now and somebody is your wife cooked you something very very delicious, your favorite meal, and somebody is calling you that, oh, please come back to this area. You have already passed the house, so but you say, hey, please come back to this area, I need to help you to do something. Will you go back to that person that you've already passed, or you'll be likely to go home to your favorite meal? You likely go down to your favorite meal first before trying to even think about whatever that person is saying. All right, so if you are looking to sell at this imbalance now, you have to wait a long time. So before the price will get enough power on the buy side to climb all these pips up to the imbalance area, that will take a lot of strength and a lot of time. So don't expect the price to go back into the imbalance until we are into the imbalance area, or at least on number one. Okay, let me say number one. First point, we'll just take some notes about this. Okay, this is not the account I want to put my notes. I think today is the 22. Okay, so notes on imbalances. Number one, don't expect the imbalance to be filled if we already started forming a new range. All right, so don't expect the imbalance to be filled if we already started forming a new range. All right, so the way you identify a new range is if you go down to lower time frame, maybe 15-minute charts. Okay, you look at the imbalance. Okay, look at the imbalance. So the place that just straight down, that's your actual imbalance. All right, so any place that you see the week, any place that you see a week like this and then it continues, that is a place where a new range started forming from. So from um from here right now, okay, from here, this week up here, down here is a new range. Okay, so then that range now had a pullback before price continue going lower. Before price continue going lower, right? So that range had a pullback. Sorry about that. Okay, so a new range was formed inside there. So a mature eye would think that the imbalance is going to be filled, but you as a pro know that until this new range is violated, that imbalance will not be filled. So you can see that this was a new range from that week. If I zoom in, you can see the week here. So this is where the new range started. If I go into a lower time frame, let me even go down to a lower time frame just for completeness sake. You can see that area now. The other block is not even clear from here. Let me see another one. Trying to see if I can find another block there. Okay, so you can see now. So a little bit clearer, you can see some green candles. Okay, so this place is not totally imbalanced like that. So this week right here, you can see that that area is where a new range started forming. So until we get up into this area or above this area, I will not expect this imbalance to start filling or to start reversing. So that's just a little note I wanted us to make. All right. So yeah, that's just basically it. And then another note is that um another note that you have to take note of is that If we have not reached the clear liquidity target, don't expect the imbalance to be filled. Alright, so if we have not reached the clear liquidity target, don't expect the imbalance to be filled. What do I mean? The liquidity target, it should be obvious to you whenever you look at the chart. If you look at a chart and you don't know where the liquidity is, then you should not trade at that point. Just leave the market, because you will be a catfish or a scapegoat or whatever you want to call it. Alright. So if you look at the chart and then the liquidity is not clear to you, where are we going to take the market to? That should be a question on your mind. Right? So if the clear liquidity target is not taken out, don't expect the imbalance to reverse yet. So this second rule goes with this first rule. So now if we had made form a new range, okay, even if it's not too obvious, go to a lower time frame and check if you have formed a new range. So if you have formed a new range and you've not yet reached your liquidity target, don't expect a notable retracement to fill in the imbalance. Okay, so that is point number two. Okay, so let me see if I can bring up another point. Now, going to gold, you see gold. I don't know if you guys remember that our old gold analysis that we said this equal lows here will be targeted. You can see it. You can see where we said external liquidity will be taken out, but we'll have a small problem at the rejection block. Everything happened just as said. We got to the rejection block and we had a problem there. The price made a pullback, and after the pullback, we continued lower. Okay, so the pullback was basically to close the imbalance. I actually thought that this thing will close in this imbalance up here, but apparently this imbalance up here has already been covered because it is in an old range. You can see that this low now, it is above this previous low, so you can say that somehow, some way, somehow it's been covered. So you can only expect price to pull back into this area to take like a mitigation block or something like that to continue lower. Okay, so price is not reaching to the higher imbalance like I thought. It just came into the lower one. Let me even check something. Okay, I didn't touch that. Okay, I thought it's mitigated here. It definitely mitigated a previous open. Maybe it's this one. I don't know. Anyhow, um, this is the gold. You can see that if you are if you are on the side of the trend, okay, you would the liquidity will be easy for you to see. It will be easy for you to see. So now let me buttress. Let me see if I can buttress a point with this gold trade here. Okay. So now we have this clear area of liquidity here. All right. So we define that there's a sponsor candle down here that will cause a retracement, and we had a retracement here. Where's the retracement going to? To fill in an imbalance. Fill in an imbalance. Okay. All right. That imbalance. There's no imbalance there actually. It was filled up. Okay. All right. It was filled up, so it probably came into this candle here as our POI. So let me delete this my expected POI and draw the new POI. Can you guys hear me? Hello? Can you guys hear me?
Yeah.
Okay. So this is the actual POI. We'll go down to lower time frame to like refine it to a year because it's hard to take out some liquidity up here. Looking at this week's. Well, anyhow, sha, nothing much, sha. So don't expect it to like for example here now, all right, here. Look at this place. Some people might be expecting the price to come up to here and feeling this whole imbalance here. But I will not advise that. Okay, I will advise you to just look to sell from here. Look to sell from here, especially if there is um there is still some clear liquidity target that is at the left. So if there's a clear liquidity target at the left of it, alright. So if we go left, try and see, you can see that there's a very notable imbalance here. Okay, it's a nice imbalance here. So I might be expecting price to get down to here to fill in the imbalance. Okay, to fill in the imbalance like this. Okay, so the imbalance on the higher time frame is stronger than these other imbalances that are on this lower time frame. So now I will not expect price to get in here except if we hit a major resistance. Okay, or if we reach our liquidity target. At this point, it might turn here, but then you can see that after taking out this liquidity, it took out this liquidity very aggressively, and now it is making a pullback. I will not really expect it to climb up into this previous range. You can see that this area now, you can see that this area is kind of covered. I will not expect it to um climb up into this place. Okay, so I'll just look to sell from here before continuing lower. Okay, so the point is that you should view the recent imbalances first. If the imbalance is very far away, don't really expect price to get there except if you can see a BMS. All right, you can see a BMS. So if price should now take out this my first imbalance, so price goes above this high, okay, I would not expect price might want to close in the entire range. So that'll be a deep pullback into this place to sell. Okay, so but as long as you are still in this move, just be selling from the most recent imbalance, not be selling from the most recent imbalance until you have a reversal, then you now expect price to make a deep correction into the first imbalance. So that's pretty much it, Sha. That's pretty much it. Like in this GBP USD now, this GBP USD, this GBP USD, I was expecting price to get into this first imbalance here because um when price was going down, so price was going down. I think let's imagine that the price is somewhere here now. Okay, so imagine that the price is somewhere here. So I was looking to sell maybe at all these points. Okay, so the price will come up and fill in a tiny imbalance here. So if you go on a 1 hour chart, you see that there is an imbalance right there. Okay, so you can see this little area. There's a tiny fair value gap there. So I was expecting a sell from there. So this is how you trade. Don't expect price to come up, and fill in all your imbalances at first. So it's until price should now move up. Okay, it moves up and it doesn't respect that your why is my network messing up like this? Something is wrong with my network. And it doesn't respect your area. Okay. So let's say it doesn't respect your point of interest. I don't know. I think it's pretty much made the reaction around there. Okay. And then it went up and created a reversal. Okay. So at this point now, okay, at this point that my POI has failed, I will now expect that price might want to reach in and close every other imbalance that might be up. So every other imbalance, price will go up there to fill it in. Okay, so my next eye, okay, my eye was now at the next major thing I can see, which is this high. Okay, so I was now looking at, all right, this area. Okay, so I can just maybe adjust it to rejection block. So I was not eyeing this area. This was the area I was eyeing. Okay, so this was the area. Okay, this one will be like a breaker block actually. This one, breaker block. All right, but I don't think it got there, sha. I don't think it got up there. It just um. Let me just cancel this thing. So you can see what it did. It just came up to around the somewhere around this area and then sold from there. So it didn't really get up to where I was thinking it to come to, but it sold. Okay, so the point I'm trying to make is that until you see a major reversal move, don't expect all the imbalance that are up there to be filled. Just chill till you see a small break of market structure within that range. Then you can now expect price to move up. Okay. Anyhow, sir, I want to move into the topic of today. Does anybody still have questions concerning this? Okay. Um, I want us to try and do all this today. So today's class will be quite long. I want us to try and do all this so that next week, yes, next week we'll move on to the ending part. Are you guys still with me before I continue?
Yeah, yeah.
All right. Okay. So different approaches to growing account. Okay. So now the approach you use and grow your account is based on you. Okay. What are you willing to afford to lose, and also your account size. Okay, your account size and what you are willing to lose. Right? Why did I even close this thing? Uh, okay, so we're doing approaches to growing accounts. Okay, so the first thing you ask yourself, if you have a few things there, there are a few things you need to ask yourself. Okay, so number one, do I do I have a tested strategy, strategy. Okay, so you need to have, before you start trading or anything, you need to have a strategy that works, right? Something you've tested by yourself and you can see that it's profitable. Okay, so you know the accuracy, you know some of the figures, right? You know the average amount of money you might get per trade if you use that strategy. Okay, so if yes, if yes, you can move to the next questions. All right. So number two, how much can I can I can I trade with without feeling attached? All right. So um, how much are you how much are you willing to lose? Okay, how much are you willing to lose? How much can I trade with without feeling attached? Okay, so um, if this is above 300, or let me see, if this is above, let me see, 250, if you $250, you can take the gradual process. Okay, I take the gradual process. Okay, less you you should try to flip it. All right. So now, when you're trading, um, most traders don't use good risk management. Okay, so you go out there, you see them 20 trades, 30 trades, 40 trades, same trade. Okay, so they open a gold trade. So let me say they are in a sell. They open trade, pa, 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 pa. As it's going down, they're still opening trade. That greed, you understand? So they have a lot of that greed, and it's going to hurt them in the end. Alright, so they open, you see so many trades. Then they open their account and show off on social media. Blue, 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 and it's just one trade. If it is a loss now, you see red, 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 red everywhere. Right? So flipping is actually good, but you have to know when to use it. Okay? So flipping is only used, or you should only flip if you have a small account and you're trying to get it up to something reasonable. Okay, so you're flipping what you can afford to lose. Flipping is like gambling. Okay, so you know that this little money now, if I lose it, I will not die. Okay, nothing, no serious repercussion. I won't be shaking, I won't be crying, I won't be doing any of that. I won't be thinking suicidal, I won't be frowning at my family members, all those kind of bullshit. You know that all those ones will not happen if you actually lose this money. Alright, so if you have that kind of, if you have a small account, okay, you can take the flipping approach. Alright, so flipping just basically means that you open um trades with bad risk management. So you have a bad risk management, but then when you're flipping, you have to be careful to use only high probability trades. Okay, because if you make the wrong move, you can easily blow that account. So you need to try and use only high probability trades when you're flipping. Okay. So an example of a high probability trade can be this gold trade, for example, now that you have a clear target. Okay. You have a clear target, and then um probably you see some sort of BMS. So let me say right here now I can count this one as this place here as a BMS to the downside. So after this BMS to the downside, I'm looking for an opportunity to sell. Right? I'm looking for an opportunity to sell to take out this my target. All right. So this is my target right here. This is my target. Okay. So you have your parameters placed. You have your external liquidity. Let me say you took it in the London session, New York session, or something that has volatility. Okay. So you can take a trade such as this. Is already moving in your favor aggressively, and you have a clean target that you know that market or price is heading for. So you can take such a trade. So if you're flipping, you need to be careful, very, very selective of your trade. It has to meet all your criteria for a good trade setup. It has to meet all your criteria for a good trade setup. You can't be taking itchy hands trade on a flipping kind of thing. Okay? Because any little mistake can blow the account. So if you're trading $20, $50, $30, advise that you use a flipping method because um it is the only way you can quickly move up the ladder. Okay, it's the only way you can quickly move up the ladder. You don't have to use it, sha. You can still go gradually. You can still grow gradually, but it will take a lot of time if you do it that way. And personally, I don't believe that if you lose $30 or $50 or $20, I don't think you will die or something serious will happen in your life or you will not eat. Okay, so these little amounts you can just use them to play. Okay, 10K or 10K or 20K, 30K, you can just try and flip them. Okay, look for high probability trades. Maybe you can take only 3 trades or 5 trades a week, but let all of them be very, very precise. Okay, you have to measure them very well. And when you're taking the trade, you over leverage. So you can take like 5 positions. Okay, so 5 positions. Let me say normally you use like 0.01 on an account that's less than $100. But if you're flipping, you can take 5 positions of that, which is equal to like 0.05 or even sometimes 10. Okay, so even if you get like, let me say 30 pips, that is $15 made extra, which is like 30% of your account in one trade. So if you have a small account, it's advisable to use the flipping model. It's advisable to just do your best and flip it. But if flipping is not your thing, if your heart is going to be beating to see big losses, if the money still is too big for you to lose, it's better to just go for a cent account. There's something called a cent account. So it's going to cent accounts are just basically accounts that measure it in cents. So let me say your account size is $20. They're going to make it to be 2,000 cents. All right, and then you can now use lower than the minimum lot size. Okay, or it will still be the minimum lot size, but then what you are going to be buying will be like 10 times smaller. So if you actually place a 0.01 trade, it will be like a 0.001 trade for you. So that's basically how it works. So you can place a set account and still use good risk management there, but it's going to take time. That's just what I'm saying. All right. So, but if you have the mind and you don't mind losing the money, you don't have too much emotional attachment to it. Maybe you can use something that someone just dashed you or some money that just came out of the blue and you did not expect it. Just try it, just flip it. Okay. But the first thing that you must have, remember that you must have a good strategy already in your hand. Okay. If you have a good strategy, there's no problem with your trading because you know that even if you lose one or two, by the third or fourth trade, you would make money and cover all that. But if you don't have a working strategy, as then there's a problem and you have to fix that first. Try and fix that first. Don't be impatient. If you don't have a strategy, keep working on it. Keep using them. Keep on doing your job or your side business while trading demo, looking for the strategy, try to perfect it. Okay, even if it takes some time, just keep putting in the work. Once you have done the work and the strategy is now in your hands, know that you are ready for anything because you have a strategy in hand, and that strategy is something that you can just deploy and make money any day, anytime. All right, so there's no rush. Just be patient and do what is necessary. Okay, so if you have a smaller account, you should do try the flipping method. Try the flipping method. But first of all, you must have a strategy that works at least in your demo account pretty well. Alright. So yeah, on to the next thing. Um okay, I think I've already explained this. To flip, you will take 5 to 10 positions, or let me say three. Sometimes the account is very small. 3 to 10 positions of a high probability trade setup with 0.01 lot size. Okay, 0.01. Yeah, I think I use shift key. 0.1 lot size. Right. So if the account is big, just use a 1 to 3% risk per trade. Right. Use a 1 to 3% risk per trade. Okay, why I said if you're using a small account, you should flip is because you notice that with a small account, you can't really do risk management like that. You cannot say, okay, I have a $20 account and I'm going to risk 1% per trade. 1% is going to be like um it's going to be like $0.2. Okay, and to risk $0.2 per trade, you need to have a stop loss that is like 2 pips every trade, 2 pips, and that's very, very unrealistic. So you need to flip. All right, you need to try and flip and ignore risk management a little bit at the start, but you should not do it for a long period of time before you get used to it, because making quick money like that can get you greedy very, very quickly. So that's just the point. Right, so if your account is big, use a 1 to 3% risk per trade. In fact, I advise 1 to 2%. Yeah. All right, let me just put at 3%. But most me, I won't actually go beyond 2% ever. I won't. Okay, so that's basically it. If you are flipping, you use 8 to 10 positions per trade, and once you get up to like $250 or $300 or $500, you can now stop and then use good risk management. What's the mistake traders make is that they keep using the flipping model on a big account, and then they commit suicide or do some other fuck shit. Okay, so you should know the place for flipping and the place for good risk management. Flipping is at the start when you're just trying to come up. All right, and there's nothing that even says that you must flip. You can just do your good risk management from the beginning to the end. Just has to take you time. Okay, but know the time to flip, know the time to use good risk management. Okay, and know what kind of trades you can place on a flipping account, what kind of trades you can place there, and what kind of trades you can place on an account that you're using risk management on. Right, so with a good account size, you can place different kind of trades. You can place high probability, low probability, medium probability, anything you like, because if you risk, if you lose your 1% or your 0.5%, it's not too much. It's just a little bit of risk, right? And you can still take 100 more losses and you will not blow, or that, or before the account to blow. Okay, so let's move on to the next thing, Sha. So that's different approaches to blowing account. The two main approaches is just basically flipping and um using good risk management. Using good risk management is the most important one. All right, is what you must learn. Flipping is just for a short while, okay, and it doesn't. It's not for every kind of situation. So yeah. So now trade management. Trade management is what you do when your trade is open. All right. What do you do when your trade is open? Okay. What do you do when your trade is open? To number one, mitigate losses. Number two, prevent a loss. Number three, secure profit. Right? So we are going to start with break even. What is break even? Break even is moving your stop loss to your entry to avoid a loss. Okay, moving your stop loss to your entry to avoid a loss. So, for example, you are in a trade and the market is already moving in your favor. Okay, and it has gone quite a bit. So, when are you going to move your stop loss to your entry point? So, what that helps you with is that no matter what happens in that trade, to just hit your stop loss and take you out with zero profit. Okay, zero profit, zero profit. All right, now, so let's look at a hypothetical situation. A hypothetical situation. What I usually do is that I move my stop loss to break even at external liquidity. Okay, so let's say I bought here at this um order block. Oh, I think this is the other block that reacted here. Let me go down to 30 minutes. Okay, so you can see the other block inside here. Okay, so let's say I took a trade on that other block. Alright, so it's picked me up there, and now the price is going up. Okay, so my entry, this is how the trade looks like. I have entry at the other block, stop loss below the other block a bit, and my target is external liquidity. Alright, so first thing I'm going to do is that I'm going to mark out my take profit points. Right, where will I take my profit? Right, so now what I'll do first is that, let me hide this first. Let me hide it. So first thing is that, where might the market reverse? So I can see an imbalance here, imbalance here. So I know that once we get here, this is a proportion block. So there might be a problem when we get there. The market might retrace a bit. Okay, the market might retrace a bit. Okay, and then I will now see this place. This place has a high and another high to the side. So these are equal highs here. Okay, these are equal highs right there, equal highs. This is my external liquidity. Okay, my external liquidity, and I might look out, I might say, is there any other thing above that I can target? Let's just assume that these are the three target points. So now right here will be my take profit one, target two, target three. Okay, so Once it gets to this target one, that's a reasonable break of market structure. Okay, so this is like MBOS or whatever I want to call it. So minor break of market structure, I can move my stop loss to break even. All right, so I can move my stop loss to break even. Okay, so once we let me use this tool. So I entered my trade here. Okay, and market starts to move. It starts moving. Okay, it starts moving like this. So once you get above that my first target, I will take off some profit. So I might take off, let me say this trade is running in $100 profit at this point. I might take off 30%, which is like $30, okay, and leave the remaining $70 to keep going. Okay, so once you get here, I'll also move my stop loss to break even so that I have nothing to lose no matter what happens. So that I have nothing to lose. There's no more risk on this trade. So I can just relax and go and do whatever I want to do and leave the price to do its thing. Okay. So once I do that, I can now watch the market continue progressing. Alright, so once it hits my second target, I can take off something else. So the reason why you're taking partial profit is so that you can pay yourself, because if you notice, trading is very tasking. You can just be trading like 1 hour, 2 hours, and you notice that you have a terrible headache. Your head is paining you because of the amount of strain it does on your brain. It's not really easy to stay in the market for a long time. So for those your work that you have put in, finding the trade, waiting for the trade to pan out, you pay yourself gradually, you pay yourself gradually. So let me say your account is $10,000. You risked why is this thing not moving? Let me just delete it. So let's just do this. So let's say you risk $100. So at this point is 5 hours. So at this point, your profit will be like $500 if you risk $100 at this small SL. So at this point now, you'll be seeing $500 profit in your account. So if you take off 30%, that will mean that you're taking off $150, and what will be left in the trade is $350. Because the reason why you're taking partial profit is because your profit and loss is not real low. Until you close that trade, you've not made any money. That trade can easily turn around and hit your stop loss and you made no money. That's why you must find points to take partials, okay, to take partials, because at any time the market can reverse. Okay, so let me just pull up a calculator. If you take partial profit, your profit will be less, but you'll be making money more often than if you don't take partials. Okay, so first of all, you close 150. All right, you close $150. Okay, you close $150. Okay, so it then gets to this point. Then gets to this point. At this point now, it is at 7.7 R. Okay, so that will be about I don't know if I have other calculator apps here. I have only one. Hmm. Let's see if I can open on the one. Okay, okay, okay. Yes. So at that place we have 7.778 and we've already closed 30%, right? So what we have is 70 times 7.78. Okay. So now if the market at this point here we had $500 and we closed 150, so now remaining 350. But when you move up to this point, what we'll now have is 544.6. Okay. So at the second target, you can close like 40%. Okay. 40%. 40%. So you close times 0.4. Okay. What am I saying? I have something wrong here. I don't know. 544.6 is what you have. So you can close like half of it. Okay. So you now have $250 to add to your account. Okay, plus $250 in your account. Plus $250 in your account. So now you've closed $400 from the trade. Right? You've closed $400 from the trade and the trade is still running. Okay. So it's not until you hit TP that you now take your profit. No, you take profit as it's moving. Okay. Some traders are going to just wait. If it doesn't hit TP, they don't make any money. And that's wrong. You're putting in work, you're putting in time, you're putting in effort, you're putting in your money as well. So try and take something as the market is moving. Okay, so once we now get to this point here, this point is 10R, full 10R. Okay, full 10R. Okay, so at that point you have 35 times 10. 35 times 10. Okay, so that's going to give you 350. $350 and you add it to what you already have plus 350. You made $750 in total from this trade. Okay, so you made $750 in total when you hit your last target. Okay, once you hit this first target here, you move your stop loss to break even. I think I've said it. Move your stop loss to break even. Okay, it depends on the trade. Sometimes I don't move my stop loss to break even until we take out external liquidity. So, for example, now if I have a target that is very high, okay, let me say I have a target that is very high. All right, so let me say this place up here now, let's say that this is my target. I will move my stop loss to break even when we get above this high because my target is far. All right, but if my target is this high, I will look to take different profits inside there and also move my SL inside here. So it depends on the trade idea. Okay, depends on the trade idea. If this external liquidity is your target, then somewhere inside this place is where you move your TP, maybe your SL. All right, that is where you do your break even. Okay, so basically by taking partials, you can see that we took $750 from this trade. But as you can see, this trade is 10R. So assuming you did not take partials and the thing went straight to your take profit like this, you would have made your $100 risk, okay, times 10R. You would have made $1,000. Okay, so you would have made more than $750 assuming you wait for your TP. But on the other side of it, you can also lose everything. If you wait for TP, it might never get there, and then you now lose money, or you only close about $200 when you see that the thing is reversing. Okay, so that's why I prefer to take profit as it's going to pay myself. Let me just have something in my account instead of entering a trade and removing my profit. I'll now go and tell somebody, hey, I've been did that trade, but it later reverse. I can't chop SL. So that's not what professional traders do. Professionals take partials. Okay, so those people that do this thing, SLOTP, you might have heard it before. SLOTP. Enter the trade and throw away your phone. Yes, you can throw away your phone, but I'll only do that if if I divided my trade into different pieces, sometimes I will be feeling somehow about the trade and I need to throw my phone away. So before I enter the trade, I will divide it into different parts. So if I wanted to take like one lot size, I will take 0.3, 0.3, 0.4. Everything is equal to one lot size, okay? But they all have different targets, okay? So the target will be TP1, TP2, and TP3, so that even if it's only TP1 that hits, I made small money there, okay? So that's how it works. Try find a way to be taking partials, not just waiting for TP all the time, okay? So most times you TP, you move your SL after break of market structure, and you also take profit after break of market structure, okay? So yeah, that is basically it, guys. Do you guys have question concerning trade management? Any questions concerning trade management?
So yeah,
Yeah.
um, how do you avoid the fear or anxiety if, for example, let's say you've already done your analysis and then you enter a particular trade and it's going and it's almost there to hit your take profit, and then it reverses and starts coming down. How do you maintain the mindset to just wait for it and see if it still goes back to back, hit your take profit?
Okay.
You understand?
Yes, this is why I don't have one take profit. I have different points to take profit. Okay. If, for example, now, if you should always have different points to take profit, except if you are using 0.01, and that's understandable. But I've said before that you should try and flip if you are using a small account. But then let's say you're using 0.01, what you have to do is that you close the trade. Okay, close the trade. So for example, now you are selling, you sold here. Okay, you sold here, you have only 0.01 and the price is almost at your take profit here, and you start reversing. So it it came up and it cleared this high, okay, and it's moving. Me, if I have just 0.01, I will close the trade. I won't even, once it reaches, in fact, once it gets here, once it made a new higher high, because it has already formed, it's already formed a high, made a higher high. You now went and make another one. I will close it at that point. Okay, I'll close it at that point. But then, if you have a trade where you can take partials, so a trade that you can take partials is a trade that has maybe 0.03 on it, 0.03 on it. So, for example, now let me say that this is my trade. Okay, let me say that this is my trade here. Let me say that this is my trade. Okay, let me say that this is my trade targeting this liquidity here. So, if this is my target one, if this is my target one, so at this point I will remove 0.01. This is my target 2. At this point I will remove another 0.01, and my final target is target 3, which is the last one. At this point I will close the last part of the trade. So if it comes near my target 1, okay, if it comes near my target 1, so it came close to this area and it start reversing, there's nothing I can do, okay, because we've not even reached the first target. I just have to wait and watch it. If it doesn't get to target 1 and it goes to my SL, I will count it as a failed trade. Okay, but any trade that gets to target 1, I count it as a win. Even if it doesn't get to final target, I count it as a win. All right, or a trade that I even follow my plan. Okay, let me say my plan is to take profits target 1, target 2, target 3, and move my stop loss to break even as target 2. If I obey all those rules and the trade still fails, I will count it as a good trade because I obeyed my plan. Okay, so let me say, for example, now it started moving my favor and it's just about to get to target one and it started reversing. It is your job as a trader to not allow your emotions to get the better of you because it might just do this and continue going your way. In fact, it might even do something like this and still continue your way. Okay, so as long as it has not gotten to any of your targets, I won't be the one that's to say that okay, drink water or drink something to calm yourself down. No, that is what differentiates a successful trader from everybody else that is failing. You have to have the discipline to just wait. In fact, if you cannot watch it, you can just keep your phone away. Okay, because even me, it doesn't actually go away at the end. You just have to control yourself. The brave people actually feel fear. You may think that okay, yeah, this person is so brave. Yes, he's brave, but what braveness means is that you do it despite being afraid. Okay, so even if I'm afraid that oh my god, it might hit my stop loss, I'm still going to hold the trade because it has not reached any of my targets yet. So if it's at target one and I took profit there, fine. It's worth to target two. I also took profit there, fine. Let me see, it's now about to get to target three and start reversing. I'm going to look at it like at this point here, I'm already my stop loss is already at break even or somewhere in profit. I might have moved my stop loss to like target one area before. So I might have moved my stop loss to the behind this consolidation here. You can see this consolidation here. I might have moved my stop loss there. So if you start reversing, I'll just watch it. If you hit my stop loss, I'm fine. If it's hitting my stop loss at break even, I'm still fine because I've taken something out of it. So this is why it's important to set several targets because if you have only one target, okay, and one take profit, and the market did not get there and is reversing, then you'll be scared. Okay, but if you have taken something previously, you won't be scared. And also, if you have several targets and is about to get to the first one, but start reversing, then you have to just wait. There's nothing you can do. One thing you can do, for example, is to just keep your phone away, turn off your data, keep your phone away, go and do something else. The market will tell you whether you're right or wrong. When you come back, you either see loss or you see profit. Okay? Even this Friday, I was feeling somehow because I was like I was testing a new strategy. I was like, this is Friday. Should I trade on Friday? I don't like trading on Friday. I trade Monday to Tuesday, Wednesday, Thursday. Why am I trading on Friday? So I saw opportunity. I was like, should I take this? I was hyperventilating. I was like, I took it anyway. And it was not showing red. I was like, oh, why did I take this trade? I just said, what else can I do with my time? I dropped the phone, started trying to read a book. Before I could read it for 30 minutes, I was already overthinking about the trade. I went back to my phone and I saw blues. So find something that can distract you. So even though I did not feel very good about the trade, it was still a good trade. It was still a good trade. The two trades I entered, they were in red when I dropped my phone. By the time I came back, both of them were blue. Okay. So if it has not gotten to your target, wait. Okay. But if it's only one position that you have and it has gone somewhere significant and it starts showing sign of reversal. So for example now, let me say um let's assume that we have one trade that we sold around here and then it got and took out this liquidity. Okay, and once we take out liquidity, that is a major target. Price might reverse. So if I take out liquidity and I start seeing signs of something bullish, I'll close the trade. I don't even care. I close the trade. Better I make money than any other thing. Okay, so depending, if you have several targets now, you wait. If no target has been hit yet, you just wait. You have no choice but to wait. Okay, but if you have just one trade and one target and you see price reversing after going somewhere substantial, if it has not moved much at all, it has not moved much, you have to wait. But if it has moved quite a bit, let me say it moved like 50 pips, 60 pips, and now it's looking like it's going to reverse, just close the trade. So that's my advice. Okay, that's my advice. But in the end, you should look at the trade. logically. That's what makes you a trader. Look at the trade logically. At this point now, if it reverses, will it totally reverse or is it just correcting? Will it later go to my target? If as it is reversing right now, where is it likely going to? Okay, what are the possibilities right now? So at every point in time, there should be like two or three possibilities in the market. And you as a trader, you should know all the possibilities. So ask yourself, what is the worst case scenario? Can I bear the worst case scenario? If you can bear it, then just chill. But if you cannot bear it, close your trade in profit. Okay. But then if it has not hit any of my targets, I just wait. But if it has hit some of them and it start reversing, I might just close the trade. Or maybe if it's ninth and it's a day trade and the trade is in profit and it starts showing sign of reversal, I will just close it. For example, I was also in Euro A. The Euro AED was one of the trades I opened on Friday. That was one of the trades I opened on Friday. So I entered this trade at this this area right here. So you can see that on the 15-minute chart we have okay. Let me just go down to the 5-minute chart. On the 5-minute chart, we have order block here. Okay, sorry, that's not it. Sorry, my bad. This is where the trade was. You have another block here, okay, and you also have this normal order block here. Okay, so this is the second order block is the one I was looking for. This one, but I'm not really sure. Will it react here? It might just react here and keep going up. So I just entered here. Okay, so what I just did is that I just entered here. Sure, I will not die now. I just entered. This was just the trade idea, sure. I entered here, right, at the other block and put my stop loss at the bottom of the range. Okay, so this was the idea. So the market just crashed. It was quite scary the way it was coming down. Okay, so this was the point where I just threw my phone away, and you can see the reaction after that. Very, very fast. Okay, so this was target one. Okay, okay, I think this was actually target one. Yeah, this was target one. This was target two, and target three is like 10 pips.
Yeah.
20. Yeah,
Okay. I can see your screen. I don't know if you shared it or not.
you see everybody that can't see my screen.
No, I can see your screen. Is it everybody?
No, other people can see my screen. Like swipe right or swipe left. Maybe you are viewing participant.
I'm on my system.
You're on your system.
Yeah. I'm using my system for the meeting.
Just try leaving the meeting and come back.
Okay. Yeah, I just did that now.
Is it working?
No, continue. If I miss anything, I'll use the
Okay. Okay. So basically, this was how the trade just was, and um now, so look at this trade idea now. So I have target one, target two, and target three. Okay, target three is up here. I think somewhere it was like 80. Target three was at 80. Okay, so that black line, this black line is target three. Target one is okay. Target one is at the okay. Let me make it proper. Let me try and remember the trade idea. Okay, so this is it, guys. This is it. Sorry, I made an error. Okay, so my plan was that once we go above this high here, okay, this high here, so this range, I will move my stop loss to break even. Okay, but once we get to target one, I take first profit, target two, second profit, target three, third profit. Okay, so now if the market is has not yet gotten to target one, okay, I can't I start reversing. I can't do anything, guys. I can't do anything. I have to wait for price to show signs of continuing the trend. Okay. If it goes up like this, if it goes up like this and hits my and comes around and hits my stop loss, I'm okay with it. So that was just a failed trade, right? So losses are part of the game. Okay. Losses are part of the game. Okay. But it came up, it hit target one, hit target two, and then it started consolidating. Okay. When it came down again, I took partials out of out of um target three position. I took partials. My stop loss by this time was already in break even. So it started to do all these things, and it was night. So once it came down around here again, I just said I'm tired of this trade. It's already whatever the time was, 5 6 p.m. I just closed the trade. Okay. So you can see it came back and even went down to almost stop loss. Okay. So it's up to you as a trader to read the situation. What is possible? What is the next thing that will happen? Am I okay with this profit? What might happen so and so time? If it reverses at this point, is it good for my trade? This trade now, if it reverses and goes into this area right now, I don't like it. I don't feel like it's still good. So I move my stop loss to this place here. Okay. And I started coming down a little bit. I just said, as it's looking weak like this, it's most likely going to hit my stop loss. So no need. Let me just close it here. That's what makes you a trader. That is what makes you a trader. Your calculation, your ability to calculate. Okay, at this point, is it okay? Okay. So I took partials, first profit, second profit. It didn't get to target three, but I was satisfied already because I've taken one, two. So it doesn't have to get here. Okay, I can just close it around there. So it's still fine. So as a trader, just try and be logical. Don't be emotional. Yes, you'll be emotional. Yes, your emotions are going to be talking to you, but think. Just stop yourself and think. What is the long term repercussion of my action? Am I reacting or am I responding? Okay, so you're reacting emotionally or you're responding based on logic. Okay, so when you're responding, you're looking at the market, accepting feedback. Okay, this is what the market is telling me. What should I do about it? Okay, so I don't think if you have not gotten to target one, I don't think it's good. Is a good enough time to close your trade. Just chill, just wait. But if it has gone substantially, just close the trade. But I advise that everybody should have a trade with multiple targets to make it easy. So once target one has not been reached, I just wait. That's my own plan. That's how I do it. Any other question?
Really, boss.
Yeah.
Yeah, so my question is, what if I'm scalping? How do I deal with multiple targets? Because I'm trading on the 1 minute. You barely have that much time to set multiple targets. So how do I deal with that scenario?
Mm. Okay. As for scalping, sha, um, I don't think scalping would allow you. Sorry, hold on. Alright, so scalping, you're just taking like 10, 15 pips. For scalping, I think that if you should start seeing weakness, you should get out of the trade. Okay, you should get out of the trade. Like for example, now let me say if you see, normally um it goes back to our teaching about strong highs and weak highs and weak lows, all those kind of things. So normally the market will move like this. So if the market is moving in your favor, it might just make small retracement. So small retracement, all right. So if I now see a big pullback and it takes out major liquidity, I'm going to close it as a scalper because that's a major retracement. And I don't care that it's going to come down to this area and continue going up. I don't really care. So if it takes out first major liquidity, so it shows sign of a reversal, I'm going to close the trade without thinking twice. So it all goes back to using your logic to understand what is happening. So let me say if the trade if something like this happens, let me say something like this happens, um let me just assume that this place now it did actually take out that important low, but it made a strong dive downwards. I won't close the trade because it still has hope. Okay. But once you take out one strong or important low on that trend, I'm going to close my trade. I'm going to close my trade. So that's how it is. Okay. As a scalper, you might just actually leave the trade. Maybe if it goes like halfway down into let me say you have waited in the trade from here to here. So if it comes down to the middle area, you might close it. I will just close it there. Right? I'll just close it there. Okay, but try and observe the ranges. Even on 1 minute chart, you will surely be able to see which one is strong, which one is not strong, which one is weak, which one mitigated an imbalance, which one took us some, which one induced the low before continuing. You'll be able to see all those profiles on that lower time frame still. So you will know when you see a break of market structure there, you will know. So once you see a BMS to the opposite side of your trade, you close it. You close it. Even if you have less profit, you close it. That's just how it is. So yeah. And as a scalper too, you know that you have other opportunities later that day. So you shouldn't be too attached to that one trade. Because as a scalper you typically take more than one trade a day. So that trade won't be too important like that to you. So that's just my 2 cents about this one.
Thank you.
Yeah.
Yeah, CJ,
Mm. Are you seeing my screen now?
is that I have a question. Yeah, I can see it now. I don't
Okay.
want to disturb you there.
Okay.
Um, I want to ask a question, not really on what you are dealing with today,
Okay.
but based on what you've treated with us
Mm.
earlier in the beginning of this class. So, is there any difference between major highs and lows, and also swing highs and lows?
No, they are basically the same thing,
Like,
just
I get,
different names. I did not say major high and low, I say major liquidity. Is that what you're talking about?
yeah, okay, there's no major highs and major lows.
I said major liquidity. I didn't say major highs and low.
Okay, major liquidity
Yes, major liquidity is a
and
swing
swing
high.
highs and lows.
Yes, that they are almost. Let me just say they're the same thing, sha. Okay, just that a swing high and low can happen in different places. Let me show you what I mean. So it's basically the same thing, sha. Let me not complicate it too much. For example, now this up here, you might say that is, I don't know this trend, sha, but let me just assume that this is now a downtrend. Okay, okay, no, this is an uptrend. Let me say this is an uptrend. Okay, this is an uptrend. So you can see here now we have market trending higher. So now this low that came down here, it mitigated an imbalance down here and consequently a sponsor candle. So I will say that this is a strong low. Now that so this is a major liquidity. Okay. Now that price has come down to target it, I immediately know that we are in a pullback. We have a BMS here. Next week, I will not be expecting to buy this anymore. Okay, I would expect to sell it down to probably previous major high. Yeah. Okay, so I expect to sell this down to probably take all this out, or it might stop here. So it's either I stop here, okay, but most likely it's going to come down to fill in this
Yeah.
imbalance here. So this sign, just once I see this, it is a reversal. But basically, sha, your question is there a difference between major liquidity and swing high and swing low? No. They are basically the same thing, just different names in different smart money courses. Basically the same thing, sha.
Okay.
Yeah.
Thank you.
Mm. Okay, reacting to the market and not predicting. So I think I've explained this without actually knowing I'm explaining it. So back to what I said about thinking about what you see in the market. Okay. So you're always reacting, not sorry, you're always responding, not reacting. Don't just look at, oh, look at what has happened. I'm so scared. Let me close my trade. No, that's not how it works. So at this point, let me say I bought down here. Okay, down here. At this point, when I see something like this, I might be wary. Okay, if I bought down here, I can automatically know that um I'll look for which one mitigated an imbalance and which one induced liquidity. Okay, I can see this one here. This one induced liquidity, major low right there. Okay, major low right there. Okay, and that person that induced liquidity is this guy, induced liquidity, another major low. Okay, so once this guy gets taken out, that might be a red flag for my trade down here. So if this guy gets taken out, I will close this trade. So it's just based on what the market is telling you. If the market goes below this low, the market is telling you that I might have a deep corrective move down to here. So you act accordingly. Am I ready for a deep corrective move down to this area, or it will be more sensible for me to just close the trade here and wait for a new buy opportunity later on to buy? I think it will be more sensible to to close here and wait for a new opportunity some other time. Okay. So now the market has taken this liquidity here. It is showing a deep correction in this range, this push up, because this is the previous strong low. So all this is still within it. Okay, so if I take this liquidity here, this is my first point of call. If you take out this place, it will be a deep run. Okay, it will be a deep run down into this area, most likely. Okay, because these are different imbalances down here. So it might come down to the first imbalance to close it and go higher later on. Okay, so you're basically looking at what the market is doing and responding accordingly, not reacting that okay, um this thing happened or this thing did not happen. You should know when something significant just happened in the market and do your best to not allow your emotions cloud your judgment. Don't allow your emotions cloud your judgment. Okay. So basically at this point here, I'll be looking for a buy at order block. Alright, a buy signal here. Okay, so if we see a buy signal, so let me say this thing should drop into the buy signal and then make a small BMS and pull back. I'll buy to continue. But if we should just take this major low here, I would start selling. I would begin to sell, looking for imbalances and retracements to sell to. Okay, so reacting to the market is just basically looking at the market, observing it, trying to be thinking logically, not emotionally. So what is the market doing right now? And if am I ready for the market's next move? What should I do to prepare for the next move of the market? If the market is reversing, should I stay in this trade or should I go out? Which one is better for my account size? Okay, so that is basically reacting to the market. I'm not trying to respond. Sorry, that's responding to market. I'm not trying to react. Okay, reacting to the market and not predicting. I don't know. I think I have to change. Let me see. Responding. Let me see. Responding. Yeah, responding. Responding to the market and not reacting. Okay, so taking profit and mitigating losses or potential losses. Okay, let me just quickly go through this. I think I've spoken about taking profit. Okay, so the places you take profit. Okay, places you should take profit. places to TP. Okay. Number one, you can TP at minor break of structure. Okay. And also TP at um sponsor candle, sponsored candle before external liquidity. Okay, because those candles can cause problem. For example, that gold trade, this gold trade has given us plenty example. Okay, for example, this gold trade here that we had, um, you can see here that I was telling you guys about the sponsor candle that is down here. So as we're selling this trade, as we this our sponsor candle will be a good place to TP. Take profit one, okay, and then before we wait for this final target. Okay, so the gold could have just rushed down and taken out the external liquidity, but we're not too sure about that. So you can take your profit here and just wait. So you wait for the pullback, okay, and then it continues to your TP2. Alright, so let's say you entered up here. This place is your first target, this place is your second target. Alright, so that's how it is. If you see a sponsor candle against you, you might want to take profits partials there. Just try and take a little bit from that place because it might have a deep correction from there. Alright, so that's another place to take profits. So third place to take profit is external liquidity. Liqui- Liquidity. And the last place I like to take profit is 10 to 20 pips above liquidity. Okay, it can be external liquidity, it can be any liquidity above liquidity. Okay, above liquidity for a proper stop run. Okay, so especially if you're on a 1 hour chart or a 15-minute chart. Okay, most times minimum that market is going to run the liquidity is 10 to 15 pips, maybe 10 to 20 pips before we find a reversal. Okay, so before we turn around. All right, so 10 to 15 pips, you might see the market just taking it out by 10 to 15 pips. Yeah, you can see which you can see here 8 8 8. Okay, so in gold terms this is about 80. How will I put this? 8. In gold terms this is about 80 pips. Okay, that's a lot. I think that's a lot. Okay, but gold, this is 8 pips on gold, right? 8 pips on gold, but compared to other currencies I'll see it's like 80 pips. All right, so it's even, let me just leave like that. Let me see if I can go to somebody else and just use something normal. Okay, so for a stop run, at least usually it will take like 10 or 20 pips before retracing. Okay, so you can see here 31 pips, 31 pips, 31 pips, 27 pips, sorry. Is purge it before trying to retrace. Okay, so I usually take liquidity my final target at 10 pips after 20 pips after the liquidity is taken out. So the market might sweep that much, 26 pips. Okay, 26 pips in this case. All right, see this one here, 16 pips. So these are examples of ways I like to take profit. Minor break of structure, I hardly use this one except if the move is going to take a long time. So if I'm not taking, let me say for example now, external liquidity is not my final target. Okay, external liquidity is not my final target, I would, what am I saying? Sorry. External liquidity is my final target. Pardon me, guys. Sorry. I don't know. I think I'm getting tired and I should wrap this up. Let's say external liquidity is my final target. So I have to look for MBOS within that range to take some profit because my target is not that far. Okay. But if my target is beyond external liquidity, so there's one liquidity that's outside my external liquidity that I'm targeting, I would not use this guy. So because it's too close by and he will not, he is going to deprive me of potential money I can make on that trade. Okay. So that's basically it. But if my target is external liquidity, I'll look for a minor BOS to take profit at. Or I take profit at the sponsor candle before that external liquidity. So these are some places you can copy. But don't just use it anyhow. You should know the situation that you use it. Know the situation that you use it. In this case now, you can use it in all situations, 10 to 20 pips above liquidity. Okay, you can use it in all situations, I think. Yes. So as long as you're on a 1 hour chart or a 15-minute chart, you can use this. Also, this one works in all situations as well. In all situations, I will definitely take some profit at external liquidity. Then 10 to 20 pips after it. So yeah, these are some points I like to TP at. You can find your own strategy. Maybe when we talk about creating your trading strategy, etc., we would look at that a little bit more. All right, mitigating losses. So you find some traders, you find that when they make losses, okay, when they make losses, they keep on using the same lot size, which is wrong. Okay, so let me say you have a $1,000 account. Uh, Bedtime. So you have a $1,000 account. Okay, when you take some loss from it, let me say, usually use $10 risk per trade or $20 risk per trade. When you take some loss, let me say you have reached like minus $50 in your account. So your account is down to $950. Okay, you've lost 5%. You're supposed to reduce your risk by half or even by four, okay, to mitigate some of those losses because there's no guarantee that you will not still make more losses as you keep trading. Okay, so when you make some losses, reduce your risk to mitigate the losses before you continue using your normal lot size. Okay, so reduce your risk. You can cut it in half. Okay, so that $50, that 5% you have lost, you can reduce it to half. So once you make back your 5%, you can now go back to using 1% risk. Okay, so try and use risk reduction as well. Be aware of the risk part of your trade, not just the profit every time. You should understand that the market is a place where you can lose money just as much as you can make money, and be wary of that. Okay, so I think let me not talk too much. I need to pack up and go to bed. All right. So anybody have questions before we close today? Any other questions? Yeah. Hmm, like this. Who asked the question? I thought somebody was talking. Some of us are wise. Every other Who was speaking now? I be no question. Okay, I assume that there's no question. All right. Um, with that, Good night and have a good night rest. Happy Sunday if you're going to church. So yes, guys, that's the end of the meeting.